Hi, it's Michael Farr at Farr, Miller and Washington. Apple reported earnings this morning, took the share price up over 25 points today. The Federal Reserve came out with a statement that was somewhat surprising but very encouraging to markets. They said and changed from their December remarks that they were going to keep the federal funds rate at as low as 25 basis points through mid-2013. Release today came out at 1:25 p.m. and said through the end of 2014. This change in Fed policy sent share prices a lot higher and bond prices a lot higher. Of course, as bond prices go up, yields fall, so we saw a dramatic lowering today of interest rates as stock prices took off. This has been something that's kind of been worrying me, that Wall Street seems to continue to depend on what's going to happen from government next. More money from government and anticipating more money from government doesn't strike me as particularly healthy. Trying to anticipate what a company's going to do next, how they're going to grow their earnings, how they're going to improve their balance sheets, how they're going to foster more sales both domestically and globally. These are the things that investors used to look at. These are the things on which decisions to invest used to depend. So I think that the volatility in markets is going to continue, and I think that this sense of artificial pricing will continue as long as governments continue to stay involved. The news out of Apple was encouraging. People are saying that those share prices are undervalued, overvalued. Certainly, folks voting with their wallets are saying that those shares, as of this news, were somewhat undervalued, at least by 25 points. So they're going higher. Europe continues to be a concern in headlines today. German Chancellor Angela Merkel came out and had some very strong words about what was necessary for the European Union. They're not going to give up on the European euro-dollar currency, but she didn't have a lot of teeth. There wasn't a lot of beef there in those comments. She was very serious, but she doesn't have the cash right now to back it up. It's going to take a whole lot of a consensus on the part of those member countries in order to come together to do something meaningful. Then we had the State of the Union last night, the Republican response by Governor Mitch Daniel. We had comments later this morning, and we're going to have more comments tonight on CNBC from Governor Mitch Romney. Tomorrow, Larry Kudlow is going to interview Newt Gingrich. So lots of comments coming out of politics, lots of head-turning news headlines leave investors scratching their heads as to perhaps what they should do next. Which one of these stories is most important? Which of the stories, if not all of the stories, will influence the investment environment, climate, terrain, and how will that change, or should they change their portfolios? I always come down on the side of caution, and when things become tumultuous, head for terra firma. I look to those companies with solid balance sheets, low levels of debt, attractive dividends right now, that can stay and ride through most storms. Those are the sort of portfolios, companies that we own in our portfolios. They've been serving us well, and we're going to stick with them. So my advice today, keep your powder dry. Try and process all of the news that's out there. It's remarkable right now, the amount of news from around the world and certainly within this country. We'll continue to get through. Don't make hasty decisions. In investing, emotional decisions will really get you in trouble. We're also going to post our daily market commentary. If you're not a subscriber, please feel free to sign up. It's free. We send it out every week. I'll be on CNBC again next week. And coming up is a speech in Delaware with Federal Reserve President Charlie Plosser. He and I will be speaking at the University of Delaware on our economic outlook for 2012. Hope you can join us. Thanks for clicking in today. For Farr, Miller and Washington, I'm Michael Farr.